Hello guys, welcome back to the CSA Forex channel. It's a pleasure having you here. And we are talking about gold. Yes, the precious metal today. What do we have in store for gold, right? And of course, if you look at what we have right in front of us from the hourly time frame, the gold precious metal, the gold shiny metal has been bullish for a while now. At least for this month of October, it has been bullish. And then what can we say should happen next? You know, in every market, in every situation, you need to be able to identify what the market is doing, or rather, let me start again. You should be able to identify what the market has done, what the market is doing, and what the market should do later, right? And if you look right in front of us, the market has been really bullish for a little while now. And then as it has been bullish, we had this area here of resistance and then resistance here, right? And then it broke out from this point here. Now, the broke out from this point here, it didn't even look back. It pushed all the way to about 1933.50 over here and then made a resistance point here. Now, look, as we are talking now, look at what the market is trying to do. You can see that this is a pretty big candle that looks to be breaking out of this resistance area. And of course, this is the hourly time frame. So the question now is this truly a breakout or is it a fake out? That is the question we need to ask ourselves. And the only way to truly know is for the candle to close and then wait for the next couple of candles to see what happens. Because this candle, as we can see, is still ongoing from the hourly time frame perspective. This same candle could easily drop lower and close below the resistance. It could even look like a bearish pin bar, signaling selling opportunity at this area of resistance. Who knows? Or it might even close higher in this manner, and then the next candle that opens rushes back down, or it might push higher or play around this area. So when we look at the market, and that's why it's called market analysis, when we analyze the market, it's always good for you as an analyst. I won't just say as a trader, because there's a big difference between an analyst and a trader. So when you look at the market from an analyst point of view, you wait for the market to act, and then you react according to what the market is doing. Simple. And one thing I also want to state now is that the time that we're in, the session that we're in now, is not London and not New York. So that means that London and New York will still come with its own fresh volatility, right? I repeat, it will still come with its own fresh volatility. Now we're still in the Asian session, right? So we have to wait. And of course, don't forget, you need to always check the calendar. We say that the calendar should be more or less the first thing that you always check in the market, because the calendar would help you to know if there's any high impact news coming out for the US dollar, as an example. Because for this instrument that we're looking at, the precious metal, most times, right, it tends to move in the opposite direction to the US dollar. So let's quickly look at the calendar, whether we have anything for Wednesday. And if you look at what we have right in front of us, this is Wednesday here. You can see we're only looking at the high impact news. And look very well, we only have for the Chinese yuan and the Great British pound, right? So that means that there is no high impact news that could cause some sudden volatility in the market. And what does that mean? That simply means that more likely than not, we should not have some serious sudden moves in the market. But then we always say that it could be breaking news or some other factors that make the markets to move. But this is just a good idea of how to still look at the market. Speaking of the market, let's go back and look at that chart. And looking at this chart now, we have already talked about the possible things that will happen, right, with respect to where it is here at this resistance point, as it looks as if it is trying to break out. Now, if you want to sell, right, wait for probably this fake out to, conclude, and then it comes back, or it gives you like a bearish engulfing over here, where you have a bigger candle that swallows the previous one, and then before you know it, bearish engulfing means for you to sell and then drop lower. And don't forget, we also have these areas here showing this trend line, right? So price needs to also push below this and maybe even test it and then drop further down if it's going to be a down move. And then on the flip side, if you're looking forward to buying, you have to wait for the price to break out properly, not a fake out. After it breaks out properly, come back to this area to retest, wait for your reaction over here, and then wait for your trigger, and then the market should do its thing and then push higher. And this is also a fantastic place to wait for the market to come back to, for you to look for buying opportunities, because this here is a support, not just a support, but it is an untested support. And I can tell you for a fact that a lot of traders all over the world, they have pending orders sitting over here. Maybe you even watching this, you have pending order here. The good thing here as well about this level is if you add the Fibonacci as a form of confluence, you see that it might probably be around the 38.2 to 50 fib marker around this area here, so to act as a form of confluence. I doubt it is at the 61.8 just by looking at it with my eyes. Beautiful. Just by looking at it with my eyes, we were indeed correct. And you can see 38.2 and 50, just in between it is where we have this level here of resistance and resistance that should act as support. So this will also be a good one for price to come up all the way to this point. And if you get an entry here to buy, and then you hold all the way here, this might probably be for a long-term buy entry. But don't forget, for buy, we have one situation here that is building up, and this same situation in this same area could also be a sell opportunity. To wait for the market to act, as we said, then we react according to what the market is doing. And that's what trading is all about. You should always have your trading plan as to how you approach the market. And then what do you do when the market does what you have seen, what you have put down? You act according to what it has done. That means that you react. That's why the market needs to act, and then you react. It's a reaction. There must be an action before you have a reaction. And that's what we have in front of us. Now, with that said, I'm going to wrap up this video, and hopefully this video has made some sense, has made you to think of how to look at the market, also how to approach the market based on your entry, based on your stop loss, take profit, and even based on fake out, because some people don't understand that aspect of fake out, how to identify fake out before it becomes a fake out. The truth now is that the best thing for you to do is to wait for the market to give you more clues, to give you more information before you now conclude that it is a fake out or it is a clean breakout. With that said, it has indeed been a good one, and I remain Tolu of CSA Forex. If this video was helpful, give it a thumbs up. If you are new to the channel, hit the subscribe button, and of course, if you have any question, comment below. There are also some links in the description below that has a free training and other sources for you to benefit from. Thank you guys. It has indeed been a good one. Trade safely, use the proper stop loss, use your volume, lot size based on your own account balance. Try not to over risk. Okay, thank you guys. It has indeed been a good one. Enjoy the rest of the day, and cheers from now. Bye.